Unfiltered opinions.
Sometimes you have ideas and you're not quite sure why.
As you secure the bag.
Sometimes you meet people and realize there's probably a reason why you stayed in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
No, I'm happy with Scrabble. Good morning. You tune in to Insider Exchange. Welcome to Market Matters. We are live. We're bringing you the latest news from a markets perspective, from companies, and anything else that we can find in between. Please join us on our stream. We're live on YouTube. We're live on TikTok as well. Shout out to our TikTok family as well. We absolutely love you guys. You guys are probably some of the best voices that we have, hey? Ooh, we love the comments that you guys put out there. This week, we are taking a look at the aftermath of Liberation Day. And we say aftermath as if it's done, but it really looks like it only is just getting started. Sai and I, throughout this live stream, might just decide to crawl under the tables, as we've discussed, because at this point, that looks better than what the charts look like. But please join us, join the conversations, share your thoughts. We'd love to hear what you guys are experiencing, what you guys are seeing. Remember, we're going to put out the rest of our show later on in this week. But for this week, for now, we're taking a look at what's been moving the markets and where we go to from here. Whoa.
So you forgot the budget.
Which budget?
Yeah, I know.
It doesn't really matter, does it? Oh, there was a whole budget vote. There was a vote. Things were accepted. It didn't really matter.
No, it doesn't. So instead, we have Liberation Day with we knew this was coming, right? So Trump campaigned on tariffs. He spoke about it, I think, in his first week. He was sworn in on the Monday. By the next Monday, he already had tariffs on Mexico and Canada.
Didn't he sign executive orders as he was sworn in?
Probably.
Like before he sat down, he had started signing executive orders.
And he rolled those back. And we knew it was coming, but we thought there were going to be two things. The market was kind of thinking like a 10% base, and then actually do the numbers and see, well, South Africa effectively charges a 6.35% tariff on average on American goods.
Not 60.
So let's go and do a reciprocal. These weren't reciprocal. These were made up. And what they basically did was take the trade going one way versus the other way, find the percentage, and
divide by 2.
And then divide by 2, so we get 30. We're claiming it's 60. We don't have 60% tariffs on anything American. And then tariff the penguins and everyone else, etc., etc.
What did the penguins do?
So the one theory is that they used it by subdomains. Literally, so Gibraltar is a subdomain. It's got internet subdomains. So Gibraltar, which is part of the UK, got a different tariff to the UK, although it is the UK. And then there were those penguins and etc. What's freaked the market is, I think, two things. One is the severity of the tariffs. The second is just that. And we've said it before with the peace or NATO story in Europe, where there's a sense of you just can't trust Trump anymore, and therefore you can't trust America. And this has just taken that many steps further. Now, the idea is you build a factory in America. So Nike, who gets stuff from Vietnam and has a 45% tariff slapped on Vietnam, must now build a factory in America and employ American workers to do low-paid, low-skilled jobs that the Vietnamese do, which American workers don't want to do when there's 4.2% unemployment. Really, no one's interested in that. The bigger trick is it's going to take you a year or two to build your factory and cost you a whole lot of money, but Trump's gone in 3.5. But then who's after him? Who's next? There's no continuity. There's no certainty. And during the pandemic, the big word was unprecedented, and that was got boring. It's that lack of certainty. So if you are a corporate bigwig, how do you plan for anything where you just don't know what's going to be happening today, never mind this year, never mind in 3 years' time when we get a new president, never mind who will be next and what will be next?
So for those out there that are listening to the audio, not exactly watching us in studio, or you kind of missed the start of our show, what we do as we come into studio is we've recently just started looking at, or we've actually just started deciding on what random songs make sense for us on a particular day, right? And I specifically chose a song today. And it just so happened that it lined up with Simon's song. And we didn't even know when we chose these songs, right? So Si's song was
The Nancy Sinatra, These Boots Are Made for Walking.
Nancy Sinatra, These Boots Are Made for Walking. Mine was Frank Sinatra, My Way. And my theory is that we've effectively got two paths here. One we have explored. Orange Mussolini, completely out of his mind, doesn't know, doesn't care, is doing his own thing, right? The other side of it is presidencies. As a president, when you leave office, you aim to have a legacy that you are known for.
Yeah.
It was Obamacare. It was economic growth in the case of Thabo Mbeki. It was, so as a president, there's a defining something that you leave office for. And I'm afraid to even conceptualize that Donald Trump's advisory team could have thought this far ahead in what they've done here. Remember we spoke about this a couple of weeks ago. We had an episode about this, I think it was maybe 2 or 3 episodes ago, where I said, could Trump be an evil genius? Right? We're in 2025. In 2026, there is an estimated $9 trillion of US treasuries that are set to roll over from an expiry point of view, which means you're going to refinance those. And if you are refinancing at a treasury, at an interest rate that is at the current levels, that means your cost of refinancing is excessively high. Yet, if you collapse the market just in time for enough rate cuts to come through, you're refinancing $9 trillion or more of US debt at an infinitely lower percentage, which in the long term is beneficial for the US, right? And also, in the grander scheme of things, when you are looking at the reset, we've spoken about this as well. You need a reset event. You had a reset event with the COVID pandemic. You had a reset event with the 2008 financial crisis. You've run hard from the pandemic. You need some form of reset for continuity purposes if you're going to push markets higher, right? Now, this is probably the best engineered reset, if it is that. And I chose this. I said that whole thing to come back to the Sinatra point. And the Sinatra point was, if his advisory team said to him, this is your objective, this is what we need you to do, he could have sat there and he said, I'll do it. I'll be the villain. I'm happy with being known as the global villain because Trump doesn't care honestly about that, right? But my condition is I want to do it my way. So when the markets are crashing, I imagine Orange Mussolini sitting in the Oval Office playing the Frank Sinatra LP, loud as anything, silently, because the plan worked.
Sure. I mean, he's got the 10-year down to 3.9 from, 4.5? I mean, that's not bad. I think maybe there were other ways to get the 10-year
Of course there were
down.
other ways to do it, but do you think that was part of his plan? No, he didn't care about that.
Agreed. And at the heart of it, he's talking around the imbalance in Chinese trade. And if you look at what China has done they came into the World Trade Organization about 30 years ago. They are classified in the emerging market, which is like weird when you're the second largest economy in the world, be that as it may. China has, someone said it to me, and now I can't remember who said it to me, one of my shows, one of my guests. China eats margins for breakfast, corporate margins. And that's what China's been doing. Look at these EV vehicles as the most latest example.
Absolutely.
So there has been a chronic imbalance in trade. Again, okay, so you've got a problem with China. There are a couple of ways to solve it. A, go chat to your buddies in Canada and Europe and Mexico and get a trade bloc against China, and then go chat with China and say, hey guys, and maybe put some tariffs on China. Why the penguins?
The penguins did nothing. The penguins are innocent. Leave the penguins alone. So the China thing, right? Interesting that you bring that up. I think it comes back to the whole reason why, and we had this conversation as well on one of the shows. I'm trying to remember what we were talking about when we were looking at, I think it was someone being upset. Oh, it was about capitalism, right? So effectively, what we're saying here, Sai, is that China beat free market America at capitalism whilst still being socialist, because they ate into margins, they grew their economy, they reduced their unemployment, they effectively did it with the largest population at some point before India took over there. But they did everything that you hope an economy would do, right? People are employed. Now we can agree to disagree around the communist policies of China and all of those sorts of things, or the socialist policies. That's not the topic of discussion here, right? So you want to be seen as the leading economy. Now, unfortunately, you've got an economy that's risen in, as you say, the last 30 years, to the extent that they are now challenging you and they rival you in terms of what it is they're capable of doing. And so you feel threatened enough to throw the entire world into a collapse because you believe that's how things should be.
Yeah, and agreed. And the challenge is, you're not going to onshore manufacturing capacity back into America. America has, it's too rich an economy in terms of GDP per capita. They don't, unless, I mean, the flip side is at the same time you open your borders to immigrants to do those jobs.
You can't. You've just told that was the first thing you said. You don't want immigrants in the country.
So you can't onshore. So this whole thing is broken unless it's to refinance that 9 trillion in debt, which, I mean, I suppose crash markets by 20 billion for 9 trillion. There's a worse trade out there somewhere.
So this is the thing. That is the genius play in it. I'm going to be honest. I don't know if he's capable of that. I mean, this is the same person.
Yeah, I mean, I'm deeply, and I know that. I mean, people have been all over my timeline all weekend telling me this. I am not convinced by the idea. I mean, the reason why the 10-year is now down as we record at 3.92. To be clear, it was at 4817 back in Jan of. Oh, wow, just this year. I thought I was going to have to zoom out further. People are buying government bonds in the US because right now, with all of this chaos, what's the one thing you can be sure of? Well, you're going to buy 10-year and get 3.9%. Unfortunately, inflation might be more over those 10 years too. I mean, that's the other flip side of it. I mean,
but again, this is why I say that even though you got to say I did it my way, is it really the best way? As you said, there are so many other more efficient ways to do it. And I suppose from his perspective, he was saying, I will get it done, but I will do it my way. And whatever that looks like is anybody's guess, which is, I suppose this is where the fear part comes in, because if you can conceptualize 14 different scenarios on how to reset a market, how to fix a global economy that is inefficient in your eyes, which again is from the viewpoint or from the vantage point of America, not from the rest of the world. Nobody else in the world had complained about this until now, right? So let's put that aside. Now, if there are 14 different scenarios to reset that, and the scenario that is chosen is scenario number 75 that sits in President someone's head, that's what concerns the markets. Markets are like, well, what does that mean for anything else? You had these options. You chose none of them. Now where do we go?
Yeah. And then there's the other point. And it comes to my first point I made. So Trump has walked back most things. The US markets are still, as we're recording this, 5.5 hours from opening. The futures are down, last time I checked, 3-4% on US markets. And that's on top of what is already a, drawdowns, NASDAQ off 21, S&P 16, Russell 2025, percent drawdowns from the recent highs. Are you messaging me Morse code by your blinking?
Help.
No. So here's the fun fact: top 40s are only 8.9. But the really, really fun fact is actually over 1 year, top 40s up 10%. Well, and pre-open this morning. Yeah.
I was going to say 10% pre-open last week.
But it becomes to trust because that's the big challenge now. So if he walks these back, and I've always said I want to play poker with Trump because man can fold like a cheap deck of cards. But if he walks this back, the market's still like, yeah.
The market's not going to bounce back. It's not going to. So again,
because what's his plan B, C, or
it.
plan 95 or 112?
So walking them back now doesn't solve the problem, right?
Yeah.
But what we have seen happen is you have wiped out. You've actually self-corrected for valuations. You and I had this conversation when we started the show, and our community remembers this quite clearly. There was a time very early in our episodes when we started the show, and I said, you said valuations are stretched. I said valuations are so high that you can't reset them without a meaningful event happening. And what that meaningful event looks like, nobody knows. I guess we've just found out.
We've just found out. And now I'm curious. I'm going to call up, let's see what the valuations, are they now... where's the other valuations? I always struggle to actually get.
While you say that,
PEs.
I put out a chat in our live stream on our YouTube, and I asked the question, is he a genius or a maniac? And I've interesting comment here from Pandu, who joins us in the chat. He's a maverick. He's not necessarily a genius or a maniac. So then where does he sit? If he's not on either side of the spectrum, where does he sit? And I think that's what the market is concerned about. Markets, by and large, markets can do a lot of things, right? Yeah. They can self-correct, they can run themselves, they can be efficient, they can find inefficiencies and, you deal with all those things. Your challenge here is, it's not that he's just speaking. If Donald Trump was just speaking, and actually, let's give credit where it's due, Si. The first time around, right, Trump version 1, 2017, right, was Trump all over X, all over Twitter, putting out statements, crashing markets, moving markets on tweets.
Yeah.
This time around, he realized that the market prices in his tweets as noise because to a certain extent, that's what markets learn to do. They were just like, oh, when he tweets, it's fine. So he found an enforceable way to get his tweets across, and that's executive orders. Because he didn't sign as many the first time around. This time around, he's like, well, I'm just going to do it as an executive order. Then they know I'm serious.
Yeah, to be honest, I hadn't heard of executive orders until his first term. And it turns out they all did it. So the NASDAQ at close, the S&P at close on Friday, the PE is 24. Still not that cheap. And the NASDAQ is 30 odd.
I was looking through how bad it's been. Last week was the worst week we've had since the pandemic.
Yeah.
Worst single week performance in any market, locally, internationally, or otherwise, since the pandemic. I wanted to see if potentially it could be the worst week since the 2008 crisis, but it doesn't look like it got that bad yet. But the point around that is we are now effectively wiping out things that...
So there's a difference to the financial crisis in 08. Okay, let's go all the way back to, let's start in the dot-com. The dot-com was valuation crazy. You put a dot-com in your stock name and you went up literally 2-3-fold. And this isn't exaggeration. I remember this happening in the late 90s and early 2000s. Then we had the 08 financial crisis. And what we had there was humongous speed by regulators to do something. Then we had, and that was a financial crisis, and we got through it in about 2 years from top to bottom. The COVID pandemic, again, both market and health regulators moved at amazing speed. Operation Warp Speed remains one of the most amazing things ever to get that vaccine out so incredibly quickly. There were other reasons, but still, make no mistake. And there was a move at huge speed to do something about it. This collapse, he went golfing.
I'm just chatting to the guys in our live stream and our live chat as well. The comments there are quite interesting. I actually don't even know what to do at this point. No. I'm looking at the markets, and you and I spoke about this before going on air was to say, unfortunately, this is not the end. This may very well be just the beginning.
Correct. Yeah. Maverick, hey, we don't
So
need
holding
Mavericks.
on doesn't even describe what we're about to go through or what we need to go through.
So James makes the point that, remember, there was another theory here where he's going to use all of this income to pay off debt. Now, firstly, it's not enough income. But the other thing is that, I mean, it doesn't work because so they're going to make maybe 600 billion, but the debt is 32 trillion. So the numbers don't really add up anyway. Even if they did, the idea that you're going to now onshore, which means you don't get the tariff, which means that the income falls away. So you're still not paying down the debt. Yeah.
Well, it does line up, though. It lines up with one thing, and that has been the trademark tactic of the United States over the last 100 years. And that trademark tactic is, if we collapse all other economies, then our economy holds strong by virtue of the fact that the dollar is the leading trade currency. And the fact that we can withstand the pain. So
They were beforehand.
right, so we can withstand the pain, and therefore, whatever damage we do to the world, it'll take the world longer to recover than it'll take us to recover. Now, in any other year,
Except for the breach of confidence, but carry on.
but in any other year, that would have worked. Coming out of the Great Depression, that probably worked. Going into the .com, going into the 2008 financial crisis, heck, I'd even say almost in the pandemic as well, right? Your challenge now is that you've got countries around the world that are saying, but why do you get to dictate that we must suffer? Why do you get to decide when the reset happens? Why do you get to call the shots? And now, with the emergence of an economy like China that says, guys, there is an alternative.
Yeah.
I think other countries are now waking up to that.
Yeah.
Now, I'm not referring specifically to the BRICS bloc or anything of that kind, but again, back to the 2020 pandemic where a trade war ensued and China came out of it and in 2025 still achieved economic growth,
Of 5%.
showing the world that there isn't an existential threat anymore. Whereas in the past, we'd been led to believe, and I think about previous generations, the boomers, the Gen Xers,
Yeah.
you'd been led to believe that if this doesn't happen from this particular economy, then everything is going sideways and nothing makes sense, and we must all just believe that this is the gospel truth. Unfortunately, now, for that economy, you're starting to see a world where people are like, hang on, maybe there are alternatives.
Yeah.
Saudi Arabia is like, no, we will control our oil price. We are OPEC. I'm looking at the oil price now, and I saw it come below 70. I saw it at $65 a barrel towards the end of last week. I can assure you, we're not going to have another oil price crash to zero like we did in the pandemic. The OPEC bloc will not allow that thing to happen. It happened once. They will not let it happen again. And you're seeing smaller emergences of that come around. So China will say, no, we're going to make sure that trade happens, right?
So what is it that Ramaphosa said that applies here as well? Do not interrupt your enemy when they... when they're doing the wrong thing.
There
They're
we
making
go.
a
There was a
mistake.
leaked. There was some leaked audio. Yes. Do not interrupt your enemy. Yes. And perhaps that's exactly what the market might start to do as well. The market might then start to look at this and internalize it. And I'm two minds about it, right? So in the past, again, having not lived through as many of these events, but having lived through a significant amount of resets in one lifetime. You know, when these things are called black swan events, for those of you out there that are wondering. And it's typically referred to as a black swan events because you see white swans out on a lake, but you seldom see a black swan. It's a once in a lifetime kind of event. And if we're talking once in a lifetime kind of events, in my brief lifetime, there's been a .com crash, there's been a financial crisis in 2008, there's been a global pandemic, there is now this happening. 4 times in one lifetime. I don't know if it's black swan anymore. And I think the market's also going to start to wake up and be like, you know what, we can survive these
So
things.
there's some good news here. When I tweeted at 9:12, the market was 5% down, and now at 10:12, it is 2.9% down.
So markets are correcting. Markets are finding liquidity. Markets are approaching this from a rational point of view and saying, even though there is irrationality involved in the markets, where is the rationality?
Yeah, Capitex 150 off the low.
Let us know where the rationality is, folks. We are out of time for Market Matters. We are going to get into our deep dive next. We're going to get into our investor insights. We'd love to hear your thoughts around the events unfolding. We'd love to get your take on how much longer we have to hold on for. We'll see where we go. I think at this point it's unfortunate. I don't even know. That's Market Matters. We're going to leave it on that note.